Hi dear traders, now we're discussing the most popular currency pairs and inventing trading plans. The single European currency welcomed Germany's decent GDP data. GDP grew 0.3% sequentially in the second quarter. The annual GDP increased 1%. Besides, a business climate index, current assessment index, and economic expectations index for Germany all went up in August, higher than flash estimates. Such strong data revived the euro and also pushed the pound sterling up. During the US session, the dollar weakened due to a decline in new home sales, which fell to 607,000 in July on year. So the number of unsold new homes increased. This proves that high borrowing costs discourage people from buying homes. The broad conclusion is that the property market is facing hard times. Moreover, the Consumer Confidence Index by the Conference Board dipped for a second month straight to 89.4 from 92 a month ago. Notably, the current situation index jumped to 121 points, but the expectation index collapsed to 68 points. I remind you that the index below 80 signals a looming recession. The US dollar lost ground in response, but the euro and the pound asserted their positions, willing to continue their uptrend. Now let's check the economic calendar for today because it sheds light on the technical picture. The calendar is almost empty for the Eurozone. The retail sales index for the UK is expected to be at -34 in August. Weak data could intensify pressure on the British pound. Recently, it has been struggling to extend an uptrend. The highlight of the day is the US GDP for the second quarter. The indicator is likely to remain flat. Investors will scrutinize other indicators to figure out which sectors drive growth and which ones lag behind. The PCE price index will be published tonight. It is the Fed's preferred gauge of inflation. The annual reading is expected at 3.3. A print for July could have grown 0.2% after a -0.1% dip. The index went down by 0.3% in March, April, and May. A recovery in July will hardly impact market sentiment. Meanwhile, hardly anyone predicts that the Federal Reserve will raise interest rates. Hence, markets are anticipating a keynote address by new Fed Chair Kevin Warsh at the annual symposium in Jackson Hole. Investors will make more serious conclusions after this speech. Other important reports are personal income and spending in the US. Fed policymaker Thomas Barkin will make his comments today on further monetary policy. The technical chart of the EUR USD pair suggests a good level for selling at 1682 during a false breakout. We could plan short positions with a target at 1653. Likewise, buyers could plan long positions inside a sideways channel. If the instrument surpasses 1682, it could grow to 1709 and 1727, where I will consider short positions during a bounce, reckoning a slide of 15-20 pips. In other scenarios, to sell the euro at 1709 and 1682 on the condition of a false breakout. If bulls don't enter the market, it's better to postpone buying until 1627. We could go long during a false breakout on a dip at 1609 and bearing in mind a rise of 20-25 pips. What about the pound sterling? We plan sell positions at 36.47 during a false breakout at a high of 1.3672. So we can sell during a bounce, reckoning a drop of 30-35 pips. A good point for long positions is the support area of around 1.3620. We could buy the sterling at 35.94 during a dip or even lower at 35.69, bearing in mind an upward move of 20-25 pips. That's all for today. Good luck.